Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Brunswick Corporation Annual Report. Brunswick Corporation offers a diverse range of products and services across various markets. The company's propulsion segment provides engines, propulsion-related controls, rigging, and propellers for boat builders under several brands, including Mercury, Mariner, and Aviator. In addition to propulsion systems, Brunswick also offers engine parts and consumables through its Engine P and A segment, which includes brands such as Quicksilver and Seachase. This segment caters to both marine and non-marine markets, providing products to aftermarket retailers, dealers, distributors, and original equipment manufacturers. The Navico Group segment is another key area of focus for Brunswick, offering a wide range of products and systems for various industries, including marine, recreational vehicle, RV, specialty vehicle, mobile, and industrial. This segment includes brands such as Lawrence, Simrad, and CMAP, which provide electronics, sensors, control systems, instruments, power systems, and general accessories. Brunswick's boat segment is also significant, offering a variety of boats under several brands, including Sea Ray, Bayliner, Boston Whaler, Lund, Crestliner, Harris, Lowe, Princecraft, Thunder Jet, and Veer. The company also provides dealer services and technology to the marine industry through its Freedom Boat Club. Overall, Brunswick Corporation's product offerings span multiple markets and industries, making it a leading provider of recreation products worldwide. The past year has seen a notable increase in Brunswick Corporation's stock price, with a total return of 35.49%. Several key news events have driven this growth, starting with the company's strong Q4 2025 earnings report and optimistic 2026 outlook. The report showed a return to quarterly profitability, with sales surpassing expectations and all four business segments recording sales growth. Management also provided an upbeat outlook for 2026, projecting revenue and adjusted diluted earnings per share increases. The company's performance at CES 2026 further boosted investor confidence, as it unveiled cutting-edge marine technology and AI-driven experiences. Innovations such as the Simrad AutoCaptain autonomous boating system contributed to a significant increase in stock price on January 6, 2026. Additionally, multiple analysts issued buy ratings and raised their price targets for Brunswick stock, citing anticipated growth in the marine market and surging leisure spending. These events collectively created a period of positive momentum for Brunswick Corporation's stock within the last year. The company's strong financial performance, innovative products, and optimistic outlook have all contributed to its increased stock price. As a result, investors are likely to remain bullish on the company's prospects in the coming months. Brunswick Corporation market capitalization of $6 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Brunswick Corporation holds a significant advantage in their industry. Brunswick Corporation trades at a higher price-to-book ratio of 3.51 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 67% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The company has continued buybacks despite weak revenue growth, raising questions about capital allocation priorities. The company have a dividend yield of 2.02%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company can be attributed to several key factors. The Navico Group segment, which includes brands such as Lawrence, Simrad, and B&G, has been a significant contributor to revenue growth. Additionally, the boat segment has also seen increased sales in major markets like the United States and Europe. Furthermore, the company's expansion into new product lines such as outboard engines and controls, rigging, and propellers has driven growth. The acquisition of Flightboard Thai Limited for $88.3 million is expected to enter a new emerging market, electric foiling surfboards, which will likely contribute to revenue growth in the future. The business acceleration segment has also seen growth driven by the Freedom Boat Club business acquired in 2019. These factors have collectively contributed to the company's revenue growth. On the other hand, there are several drivers of revenue decline. The propulsion and accessories (P&A) segment has been a major contributor to revenue decline. Decrease in demand for products and impairment of Navico Group reporting units' goodwill have also impacted revenue negatively. Furthermore, an increase in valuation allowance on deferred tax assets has resulted in a decline in revenue. It is worth noting that macroeconomic factors and market conditions can impact revenue growth or decline. The company's use of derivative financial instruments for risk management may also have an indirect impact on revenue. However, these factors are subject to change and may not be directly related to the company's revenue growth or decline drivers. Net income experienced significant fluctuations between 2024 and 2025. Initially, it decreased by $322.5 million, followed by a decrease of $267.4 million. However, the company managed to turn its net loss into a gain, with a net income of $371.1 million in 2025. Despite this improvement, net income still decreased from $242.6 million to $193 million. Profit margins also underwent changes during this period. The gross margin declined from 25.8% to 24.8%, while selling, general and administrative expenses increased from 14.3% to 15.9%. Restructuring, exit, and impairment charges significantly rose from 2.3% to 6.6%. As a result, GAAP operating margins decreased by 280 basis points, from 11.7% to 8.9%, while adjusted operating margins declined by 330 basis points. The reasons behind these changes are multifaceted. Impairment charges for Navico Group contributed to the decline in net income and profit margins. Additionally, supply shortages and increased costs, as well as adverse capital market conditions, currency exchange rate fluctuations, competitive pricing pressures, and higher energy and fuel costs, all had a negative impact on profitability. The company's financial performance is a testament to its ability to generate positive operating cash flow. According to the financial statements, in 2025, the company reported a significant amount of net cash provided by operating activities. Specifically on page 41, it is stated that this figure stands at $562,100,000. Furthermore, as confirmed on page 62, the net cash provided by operating activities of continuing operations for 2025 was an impressive $585.7 million. These figures demonstrate a strong ability to generate cash from its core business operations, indicating a healthy financial position and a positive outlook for the company's future performance. The financial performance of various regions can be gleaned from the extracted summaries. According to the revenue data, the United States was the top-performing region, accounting for 76% of the total revenue with $4,856,100,000. Europe and Asia-Pacific trailed behind, contributing 14% and 7% respectively. In contrast, Canada and rest of world regions had lower contributions, with $402,500,000 and $332,800,000 respectively. These figures indicate that the United States was the dominant market for revenue generation, while other regions lagged behind. Interestingly, Japan saw an increase in purchases from Tohatsu Marine Corporation, TMC, in 2025 compared to 2024, suggesting a positive trend in this specific region. However, there is no clear indication of which segments or regions performed poorly, except for the unspecified international affiliates that recorded a decline in fair value, leading to an impairment charge of $19.2 million in 2023. Management is optimistic about the company's outlook, highlighting a unique portfolio of industry-leading brands across multiple marine categories. They aim to invest in global product leadership and innovation, with a strong focus on artificial intelligence-enabled approaches and emerging business models. The propulsion segment is a world leader in manufacturing and sale of recreational marine engines and propulsion systems, contributing significantly to the company's revenue. The boat segment will continue to promote services and activities to enhance consumer experience and dealer profitability. To remain competitive, management plans to introduce new products, experiences, and services while maintaining effective distribution and making strategic acquisitions when necessary. Protecting and strengthening the company's brands is also crucial for expanding its customer base. The company's growth initiatives are centered around innovation, with a focus on developing emerging business models and enhancing consumer experience through shared access solutions. Management acknowledges potential risks from adverse capital market conditions, but remains committed to advancing the company's strategy and achieving long-term success. The company's financial activities have been notable in recent years. One significant aspect is its dividend payout policy. The company has indeed paid dividends to its shareholders, with a substantial amount of $112.6 million distributed in 2025. This demonstrates the company's commitment to returning value to its investors. In addition to paying dividends, the company has also engaged in share buybacks. In 2025, it repurchased $80 million worth of shares, indicating that management is confident in the company's future prospects and believes that buying back shares will enhance shareholder value. That concludes the financial summary for Brunswick Corporation. Feel free to comment below, and I will be happy to answer them when possible.